Trading Ethereum is available to everyone. However, not everyone can make substantial profits. And so if you want to make money trading crypto, you need to understand numerous aspects such as the nature of Ethereum, the cryptocurrency features and peculiarities, the factors determining pricing, and so on. And so this video will explain essential aspects of trading Ethereum, the ETH network features and factors affecting price trends. You will also learn about trading CFDs, ETH cryptocurrency pairs, and complex instruments and profitable trading strategies. But let's start with the Ethereum Classic, which is an altcoin that is basically the source code for Ethereum. It was created in 2015 by Russian-born Canadian programmer Vitalik Buterin. In 2016, after the scandalous scam of the DAO running on the Ethereum blockchain, an unprecedented decision was made to make a copy of the original branch, which is a token fork, to protect victims of the DAO. The Ethereum clone took over the original name of the token and its ticker ETH, while the old branch was named Ethereum Classic and the ticker ETC. Today, ETH is second only to Bitcoin in terms of market capitalization. So if in 2015 the ETH token costs $1, then today, which is 21st of April 2023, the price of Ethereum versus the US dollar is around 1900. And so no wonder the investment portfolio of every second crypto trader includes this coin. So you can sell or buy Ethereum on any centralized or decentralized exchange. And Ethereum is a decentralized currency and its price is very volatile. At the same time, it can be used like a regular fiat currency, receive, send, lend, etc. That is, it is just a payment network that does not depend on central banks. And the Ethereum blockchain offers more sophisticated tools for a fundamentally different economy based on smart contracts. And so, Ethereum and Bitcoin trading form a significant part of the cryptocurrency market. Therefore, traders and analysts often compare these underlying assets. And so, what do the Bitcoin and Ethereum ecosystems have in common? Firstly, both currencies, cryptocurrencies, are based on a decentralized transaction confirmation mechanism. New tokens in both systems are generated by miners. Both cryptocurrencies are extremely volatile. However, Ethereum is more volatile than Bitcoin. Many other cryptocurrencies can be classified as a risky asset. Also, Bitcoin outperforms Ethereum in terms of market capitalization. The differences between Ethereum and Bitcoin are as follows. For example, users of the Ethereum system can enter into smart contracts without programming knowledge. There is no such possibility in the Bitcoin system. So, next one is that the Ethereum virtual machine, the EVM, allows multiple applications to run on the same platform at the same time. And due to this decentralized computing machine, there is no need to create a separate token for each application. Bitcoin is based on the proof of work algorithm, which encourages miners to perform more computing operations on their hardware. In September 2022, Ethereum switched to the proof of stakes protocol. That is, it is enough just to stake ETH tokens to distribute the reward. So you can create your own coins on the Ethereum basis without developing your own blockchain. And as a result, in 2017, there was an ICO, the initial coin offering boom. And the ease of creating an altcoin, the anonymity and the hype around the cryptocurrency attracted a lot of scammers to this industry. And in 2018, many projects went bankrupt and the first large-scale crisis has begun in the cryptocurrency market, as you can guess. And so, next, what drives Ethereum's price? Well, in your investment strategy, you should take into account factors that can affect the value of an asset. It is especially acute for margin trading, as due to the use of leverage, there is a high risk of losing money rapidly due to leverage. And so the Ethereum value depends on many factors. And let's begin with the, maybe for some, the obvious one, but for others it will be a surprise, which is a Bitcoin price. And so, centralized and decentralized exchanges mainly trade Bitcoin, and this cryptocurrency dominates on the retail investors' accounts. Therefore, it is important to closely monitor BTC prices because their change often sets the sentiment for the entire cryptocurrency market, including Ethereum. And so, here it is important to study the Ethereum price chart, which is, of course, the next part. Well, if the Ethereum rates does not correlate with the movement of Bitcoin, then the Ethereum trend is likely to change soon. The number of projects in the Ethereum ecosystem, which is another case. So the Ethereum blockchain is not focused on balancing supply and demand, but primarily on creating a global decentralized platform for the development of other projects, which is a rule, contain a lot of ETH on their balance sheets. However, the reports of a project hacks have a negative impact on the Ethereum market. The attractiveness of mining is the next point. The price of ETH tokens and crypto derivatives largely depends on the attractiveness of the decentralized network among miners. After switching to proof-of-stake consensus, miners began to receive rewards from staking crypto coins. If the investment attractiveness of Ethereum falls, then there is a risk of mass sales. As a result, the value of Ethereum token will decrease. Next point is wide use. Large companies are increasingly using digital currencies and cryptocurrency exchanges as an alternative to traditional fiat currencies and banks. If Ethereum is preferred, its price will also go up. Growing popularity of derivatives is the next point. Well, instead of the classic spot market, more and more people are starting to trade Ethereum financial derivatives with leverage. This allows you to multiply initial investment, but also affects the volatility of the instrument, as in addition to buying, you can open sell positions. So, next point is processing capacity. Ethereum's processing speed is quite slow with only 15 transactions per second. Because of this, many popular ecosystem projects have technical problems, and developers are forced to switch to other networks. Such cases negatively affect the blockchain's popularity and Ethereum's price. As for the Ethereum development, the developers are gradually upgrading the network. A global update of the Ethereum 2.0 is planned, which is being introduced in stages. At the moment, the first stage has been completed, the blockchain has switched to the proof-of-stake protocol, and in the future the development team is going to increase the speed of transaction processing and improve the security and scalability of the network. If successful, the Ethereum rate will rise. And so, a smart contract is a very convenient financial instrument that provides transparent conditions for interaction between Ethereum users due to its decentralized nature. And so, this kind of alternative to legal contracts, while the significant risk of non-execution of transaction is minimized by blockchain technology, as long as Ethereum exists, it is impossible to introduce alternative database structures. That is, to change the contract in any way or cancel it. And so, let us consider smart contract capabilities using the example of a soda machine. The buyer puts the coins in the tray and they are stored in the machine until the automatic execution of the contract, that is, until the soda is provided. Similarly, retail traders, under the terms of the contract invest a certain amount of ETH, which is blocked by the system until the obligations are fulfilled. And while the soda machine can fail, in the case of the blockchain, the own risk of non-execution or delay of the contract is close to zero. So, there are other benefits of smart contracts as well. Firstly, they are easy to track and verify. The contracts are in the public blockchain, of course. Then, the support of complete privacy, which is not possible, for example, when using a bank account. Any participant can get acquainted with the program code of the contract, that is, make sure that the public conditions are transparent. But of course, not everything is gold that shines, and it also has its flaws. So let's discuss major problems of Ethereum. So when choosing a digital currency, it is important to explore its advantages and disadvantages. The main problem of Ethereum, which the developers themselves recognize and plan to fix in the future, include the following. So first one are safety problems. Traders usually hold Ethereum to fund their trading account or for other financial transactions. Few people hold large amounts without a specific purpose. There is a risk of theft through a crypto exchange and fraudulent projects on the network. Also, the user may lose private keys and permanently lose access to their digital funds. So when going to buy Ethereum, the user counts on cryptocurrency confidentiality. However, Ethereum trading does not imply total confidentiality of transactions. If you want to ensure complete anonymity on the network, pay attention, for example, to Monero. Trading Ethereum on crypto decentralized or centralized exchanges often requires a lot of transactions. However, Ethereum has problems with scalability. Its processing speed is limited to only 15 transactions per second. If there are more computational operations, the speed will suffer. And so, next one is high transaction fee. The commission in the Ethereum blockchain is formed according to the principle of an auction. The first one is served who pays more. As a result, during periods of peak loads on the Ethereum network, the cost of one transaction can reach $50 or even $100.